All right, everybody. Mike Lieberman, Dr. Charles Lieberman, Chief Investment Officer, Advisors Capital Management. Welcome back to the 10-second interview show. Real quick, Chuck, I'm going to ask you 5 questions. You have 10 seconds to answer each question. They are all economic-friendly questions, and you are an economic-friendly kind of guy. All right, so let's get into it fairly quickly. The Fed cut interest rates by 50 basis points, and yields have gone up, as you say, by a lot. Bridget, throw up 10 seconds. Chuck, why?
Well, the Fed is stimulating the economy or reducing the restriction at a time when the economy is strong. People are worried that the labor market's going to stay tight, the unemployment rates drop. We could see more inflation.
So it's possible that the Fed is cutting interest rates and maybe they shouldn't be?
Absolutely. That was an easy one.
Quickest answer you've ever had on this show. I mean, that was like 2 seconds, 1 second. That was incredible. Okay. What data is it that the Fed is looking at, though? I mean, are we really making determinations, or is the Fed, I say we, is the Fed really making determinations on interest rate policy based on month-to-month data flows at this point? When we always say data specific and data dependent, are we that data dependent that we're down to 1 or 2 data points every single month to make a determination about policy? Seems thin.
Yeah, although some of the recent data that we've gotten is really much more impactful. Like the last jobs report, they revised a lot of the data historically. All of a sudden, the whole image of the labor market has gotten vastly stronger. And that's what undermined the Fed's credibility about easing rates and why the market's nervous about long-term rates in particular.
Okay, it's now October. What does the Fed do between now and the end of the year? 10 seconds or less. Good luck.
Yeah, they have 2 windows, and the market is still priced for about 75 basis points of rate cuts, and I will bet against that. If I had a guess, I think we're going to see 125 basis point cut, and probably no more than that.
Okay, and now 2025, let's bring it home. Last question. This is like this, I mean, when you do short answers, these are short videos. 2025 is the greater risk to both the equity and bond market, a Fed that lowers rates, a Fed that keeps rates flat, or a Fed that has to increase rates because inflation is back? Take us home.
I think the greatest risk is the last of those, that inflation doesn't come down as the Fed hopes or expects, and therefore it's put into a very difficult position of where it actually has to consider raising rates. It won't happen early in the year. They'll want definitive data to convince them that they have to do that, but that is a significant risk.
That would be quite the reversal of theory that's out there right now. Certainly 2025 looking to be just as exciting as 2024, right? I think every year always has something exciting. With that, like and subscribe. Marketing people tell me to say that. Thanks, Chuck. Appreciate it. 10-second interview show. We'll be back when there's more to talk about. Thank you.